Mirae has a balanced advantage NFO. What kind of help this fund can do to your wealth creation process? Or will this fund is going to hurt your wealth creating process? Let us evaluate. Hi, this is Ramalingam from holisticinvestment.in. We help individual investors like you to take right financial and investment decisions so that you can reach your financial goals faster and smarter. First, let us understand about this balanced advantage fund category. Then we will go ahead and understand the investment objective and strategy behind this Mirae Asset Balanced Advantage Fund so that we will be better equipped to analyze this particular fund. Can we? Come on. What is Balanced Advantage Fund? Balanced Advantage Fund invests across equities and debt and uses dynamic asset allocation as a strategy, tactically moving between these based on market conditions. Balanced Advantage Fund, they invest in equity as well as in debt in both asset classes, but they will dynamically change the allocation between these two assets based on market condition. If equity market looks overvalued and expensive, they will reduce the exposure. When the equity market seems to be very cheap and undervalued, they will increase the equity exposure. This is what the Balanced Advantage Fund category promises. But do they deliver that? That we have to check up. There is also another type of fund which is a balanced fund. So at times people may get confused between what is Balanced Advantage Fund and what is Balanced Mutual Fund Scheme. In Balanced Fund, also a hybrid fund, but there are some restrictions. There is a limit. Minimum 65% the fund has to maintain equity exposure there. And beyond certain level, they can't increase fixed income exposure. Here, no such restrictions. Balanced Advantage Fund primarily adjusts equity exposure on the basis of overall market valuations. Fine. As we have understood the category, now we will move on to this NFO. This NFO is open till 3rd August 2022. Even if you miss the NFO, this is an open-ended fund. Once the fund reopens, you will be able to do regular purchase and repurchase. The fund manager is Harshad Borak. The benchmark is Nifty 50 Hybrid Composite Debt 50/50 Index. Minimum application amount is just 5,000 rupees. And there is no entry load and there is an exit load of 1% if you withdraw before 1 year period. This fund comes under the category of hybrid dynamic asset allocation. This fund aims to capitalize on the potential upside of equities while attempting to limit the downside by increasing fixed income exposure. So they are trying to manage dynamically with investments like equity related instruments, and active use of debt, money market, and derivatives. So the objective is by dynamically managing between equity and debt, they will deliver long-term capital appreciation. Dynamically change their asset allocation based on the daily equity valuation is their main investment strategy. If they think based on their calculation, based on their outlook, based on their judgment, if the equity market seems to be overvalued, expensive, then they will sizably, considerably reduce the equity exposure in their portfolio. That means they will increase the fixed income exposure. They will do the reverse if they find the equity market seems to be very cheap to them. So this fund can drastically cut or rise their exposure to debt as well as equity. Anytime they can change everything based on the prevailing market condition. So this fund aims to use market volatility as a growth tool in their favor to create long-term wealth. And as an investor, you may have questions like, Is it a good time to invest in equity? Do I have to invest in equity at a stretch, or do I have to stagger? Do I have to wait and invest later? Is it a good time to invest in fixed income? Do I have to invest as a lump sum? How much to allocate in equity? How much to allocate in debt? All these questions you need not worry, because these questions are handled by the fund manager himself. He will decide the asset allocation and when to invest and how much to invest between equity and debt. So that way, this fund seems to be having a lot of good promises to investors, but do they deliver all those promises is what we have to check up. We did an in-depth, detailed analysis on this fund. First, I will list down what are all the positive observations when we did the analysis. Then we will look at the negative observation. Finally, we will decide what is the takeaway. When we invest separately in an equity fund and fixed income fund, and we change the allocation from equity to debt or fixed income fund to equity fund, when we rebalance assets, we have to withdraw from fixed income fund and put it in equity fund. So there will be exit load, there will be taxation issues. But in these kind of balanced advantage fund, when the fund manager changes the asset allocation between equity and fixed income within the scheme, there is no taxation, there is no exit load for investors. So this is an added advantage in this fund. Because like this fund like automatically shifts money from equity to debt, debt to equity dynamically based on the market outlook. This looks less monitoring. You need not monitor, look at macros and do the asset allocation rebalancing part. Because this fund also invests in fixed income, compared to an equity fund, this fund has got lesser volatility. Compared to an equity fund, this fund can give you stable return because of fixed income component. Equity fund, they will invest 100% in stock market, so they are more volatile compared to this fund. So investment risk in balanced advantage fund is comparatively less. Potential for capital appreciation in the long run is there always. Yes, to some extent, this fund will be able to beat inflation. So these are all the positive observations when we did our analysis. Now I'm going to list down what are all the negative observations when we did our analysis. As an investor, you do not have control over decision making on how much exposure to have in equity, how much allocation to be given to fixed income. The fund manager decides. Suppose if your risk appetite is to have only 30% exposure in equity, 70% in fixed income, then this fund is not suitable. Right? So also based on market outlook, you want to decide how much allocation to be given to equity and fixed income. Again, this fund is not suitable to you because you don't have any say on what kind of asset allocation to be maintained in this fund. If you have a portfolio, so let us say you have got 10 lakhs portfolio, 7 lakhs invested in equity, 3 lakhs invested in fixed income. Market has crashed. Because of that, 7 lakhs has become 4 lakhs. Now there is a requirement for you, you have to withdraw 1 lakh. You don't want to disturb market based investments because they are at a loss. You don't want to book a loss. You can withdraw 1 lakh from fixed income and leave equity as it is. It will recover as and when market recovers. But in a balanced advantage, the entire 10 lakhs goes to the fund, and the fund maintains the asset allocation. When you need to withdraw 1 lakh, you have to withdraw 1 lakh collectively from the fund. From both the assets, it will be withdrawn. Based on the ratio they are maintaining, it will be withdrawn and given. You can't instruct the fund manager to withdraw only from your fixed income portion and meet your emergency requirement. It is not possible. So when there is a requirement, you may have to book a loss also if there is a loss in the portfolio. Being an NFO, this fund is not having a track record. Because it is not having a track record, we are not able to do any analysis. What kind of success rate this fund will have in dynamically managing the fund? Whether the fund manager is able to time the market properly. proactively? That we have to test. Because there is no performance, there is no track record, and there is also not a portfolio. What kind of securities, what kind of stocks they are going to invest, we don't have a list. So we are not able to do any analysis. We are not able to take any calculated risk. We are simply taking blind risk when we invest in an NFO. Normally, fixed income funds will have less expense ratio. Equity funds will have higher expense ratio. Though this fund may have 30-40% fixed income exposure, even for that 30-40% fixed income exposure, the equity fund expense ratio is what charged. So that way, this fund has got higher cost. So what is the final takeaway on this fund? Though the balanced advantage funds promises to manage the equity and fixed income asset allocation dynamically, it is highly difficult for the fund manager to successfully time the market. Timing the market before market correction, reducing the equity exposure before market recovery, increasing the equity exposure is practically not possible. If we take the track record of existing balanced advantage fund, it is not possible. So it is easy to promise that like we will dynamically manage, but it is very tough to deliver. And also, fundamentally strong investment strategy is static asset allocation. Keep a fixed asset allocation, maybe based on your risk appetite, you want to keep 70% in equity, 30% in fixed income. And when the market crashes, again rebalance it. Market recovers, again rebalance it. That would be a much better strategy that will help you automatically do buy low and sell high is possible when you do this static asset allocation strategy. In dynamic asset allocation strategy, when you try to do it, timing, you have to time it correctly. That can land you in multiple problems. If at all you decide to invest in balanced advantage fund, why should you invest in Mirae Asset Balanced Advantage Fund NFO? There is no clear-cut answer we could find when we did our analysis. Because there are existing balanced advantage fund with good track record. We could see what is their portfolio, how they have performed, what is their success rate in dynamically managing the assets between equity and debt to equity movement, how they are able to do it. We could do all these things. Why should we invest in this NFO? There is no reasonable answer. This fund is not having a portfolio, not having a track record. Without doing any analysis, definitely we are taking blind risk. As an investor, you should avoid taking blind risk. You should always take calculated risk. If at all you want to invest in Mirae Asset Balanced Advantage Fund, then in that case, why don't you wait for a couple of months? The fund will reopen. They will start investing in different securities. You will know what kind of portfolio they are building, how much exposure to large cap, mid cap, in fixed income, how much to gilt, how much to short-term bonds, how much to long-term bonds. You will have an idea. Also, how they are able to dynamically manage success rate. Also, you will be able to evaluate if they have a track record. So, if you want to invest in this fund, I would suggest wait till they create a portfolio and a small track record at least. Hope you got a detailed idea on this particular NFO. If you have any further questions on this NFO or any other investment options, or if you have questions on achieving your financial goals, feel free to book a free appointment with our certified financial planner. To book this free appointment with our certified financial planner, I have given you a link below this video in the description. Also, we regularly organize insightful investment webinars with eminent investment experts. They talk on long-term investment techniques, long-term wealth creation strategies. Investors found all these webinars very enlightening and insightful. End of their presentation, you can ask your questions to them directly. They will be handling your personalized questions. If you want to participate in these webinars for free, please click the link below this video in the description box and just leave your name and email ID. I'll be happy to send you the invite for the next webinar. Hope you like this video. I'll again meet you in yet another useful video. Thank you. Bye-bye.